in Nigeria, the inflation we have is not demand pull, which is the classic inflation of too much money chasing too few goods.
Yeah.
Our inflation is cost push inflation, which is driven by prices. The key culprit here is food prices. Food inflation is already close to 20%. I think it's 19.98 at the moment. I think that's what is most disturbing of those numbers. Then fuel prices are also going up, which is also causing inflation. And of course, utility prices, price of electricity is also gone up. So these three factors are what is driving inflation. And we're looking at the trajectory of inflation, going higher and higher. So that is really where the challenge is. And I think the most disturbing trend that I've seen from these numbers is the fact that the significant difference that you used to see between rural and urban inflation, that gap is shrinking. Maybe there's only 1% now in terms of what is happening in rural areas and the urban areas.
Yeah. Now, the CBN inflation range has a floor of 6% and a ceiling of 9%. This rate of inflation of 15.7% and food inflation of 19.56% means that the mandate of maintaining price stability is failing in spite of the interventions. For instance, we had the Anchor Borrowers Program and, of course, lending to job-elastic sectors. What should the CBN do now that it looks like the economy may be unraveling?
Well, I don't know if the CBN can be able to control this because what has been driving food inflation has been the security situation in the northwest. The northeast of this country, which is traditionally the food basket. So not only do we have a food security issue, but of course this is also a national security issue, and we can now begin to see that it is impacting on the economy negatively. Then, if you add the fact that we had closed our borders. All these factors are what is exacerbating the food inflation prices. And of course, as you've said, with all the money that we have spent on agriculture and try to look at self-sufficiency, for food prices to be at this level is rather disappointing. So a lot of these expenses might be beyond the central bank's control. So that's what we need to look at. But I think CBN has to look back into time. Because there was a point in time where inflation was 19% and they reduced it to 11%. But, we've also had some economic shocks with the COVID and the EndSARS protest had significant. And we should all understand now that this economy is actually now in a recession.
Well, the CBN on numerous occasions has reiterated its stance that inflation above 12% is growth retarding. Today, we're seeing interest rates at less than 1% and inflation above 15%. Is it possible to achieve the anticipated recovery in this situation? And how do you think investors will react to this?
That's a very interesting question because, as you've said, as far as the financial markets are concerned now, real rates are negative. But don't forget that we had a problem before where Treasury bills were close to 18%. But you see, government now is spending close to 85 to 90% of its revenues to service debt. So government can no longer afford to place Treasury bills at 18% because they can't afford those payments. It's putting a lot of pressure on the financial system. So right now, real rates are negative. Last year, we had significant disintermediation between the bond markets, and most money was now moving from Treasury bills and government bonds and government securities into the equities market. So towards the fourth quarter of last year, you saw a rally in the equity market. So that money that left the Treasury bill markets went into the stock market, and you saw that rally. But there's only a limit to which the stock market or our equities market can absorb those funds. So right now, most of this money is now going into the real sector of the economy, so to say. And with the credit policy that the central bank has put with low interest rates, let's hope for once the real sector will benefit from these low interest rates, and that can be the stimulus to growth. However, I think we have an MPC meeting coming up to see what the central bank does.
Yeah. Okay, just as you did mention there, the FGN debt levels are now at above 32 trillion naira with a foreign currency component in excess of about $34 billion. Recently, the federal government said it intends to scrutinize its overdraft and part of its ways and means advances at the CBN. Some analysts put the overdraft level at 12 trillion naira. What will the effect of this measure, what will be the effect of this measure on interest rates and, of course, inflation in the first quarter of this year? And is this an answer to the stagflation?
Well, clearly, I think we have challenges, but in a recession, the primary focus right now must be growth, how we should get out of this recession. So if the central bank starts to think about jacking up rates, it will only be counterproductive to growth. You will just worsen the recession. So I think it's maintain status quo right now and let those funds begin to let's begin to see the effect on the real sector. I mean, their own predictions is that we'll be out of the recession first quarter of this year. So let's see how that pans out. We have to wait and see, and let us see if we have the policies in place to take us out of the recession. Now, the fact that I'm not quite sure the figure you quoted, but 12 trillion overdraft with the central bank. The fact that the federal government is relying strictly on the central bank for financing its deficits in itself is very disturbing. And one has to be very careful because, as you know, you have a lot of CRR funds from the banks that the central bank has sterilized. And now the federal government of Nigeria is beginning to crowd out the private sector as the largest borrower in the economy. The private sector can. So we really need to watch this very, very carefully and hope that a lot of the CRR funds that have been sterilized by the central bank is not what the central bank is using to finance government, because the banks don't pay any interest on those funds. So we need to really understand and see some transparency in how that is going. It's not, it doesn't look good, but we need to see our way out of this.
Well, looking at the exchange rate, typically currencies in high inflation countries tend to depreciate or weaken relative to those in low inflation economies. The Naira is currently trading at 475 Naira in the parallel market. What will happen to the Naira with this level of inflation if nothing is done about the artificial low interest rates in Nigeria?
Well, I think what is very important is that what we tend to underestimate in Nigeria is this diaspora funds that are coming. People talk about diaspora funds coming in maybe close to 25 to 30 billion a year, which is close to 80% of the federal government's budget. So this is a significant amount of money. As you said, this money enters in the parallel market because that is where the market is. The central bank over the last 4 years has, the devaluation of the Naira is close to 120%, which doesn't speak very good of the currency management. And I think it's a very simple process. All that the central bank needs to do is to give us a single window, one single window, and let most of these diaspora flows be transparent. As you can see, had made a U-turn in their policies, and they had liberalized all the domiciliary account operations to ensure these diaspora funds come back. So you don't put policies in place that will encourage the parallel markets. Let there be one single market window, and I believe me, the Naira will find its level. At a point when oil prices are high, then we need to revalue the Naira, and that's what we need to do. Not only do we need to have one window, but we need to move away from a static Naira, so that if oil prices go up, then the Naira should appreciate. And, if oil prices go down, then the Naira devalues. So if the prices are going up, it needs to go up and down, not just continue devaluing the Naira. We need to move away from that static exchange rate mechanism and move to a single window. And the Naira will find its level. I don't have any doubts about that.
All right. Thank you very much, Mr. Adebajo, for your time. We always appreciate your time on the show. Be well and stay safe.